The Russian currency, the ruble, was down as much as 30% on the dollar this week as distressing scenes continue to come out of Ukraine following the Russian invasion. Welcome to our market analysis videos here at Zenfinex. For those who are new to the channel, my name is Connor. I'm the senior market analyst at the company, providing to you daily videos on market analysis and educational content. And on behalf of everyone at Zenfinex, our thoughts do go out to the most affected by the unnecessary conflict seen in Ukraine. We hope for a peaceful solution as soon as possible. And for today's video, I'm going to analyse what has happened to the ruble currency following the invasion. So last week I put together a forecast video which explained the impact of a full-scale Russian invasion of Ukraine on the key financial markets, and make sure you go back and check that out because I provide an overview of what could happen. But to provide an update on the Russia-Ukraine invasion at the moment, that last night we saw more heavy shelling in Ukraine. Distressing videos have been shared on social media of residential buildings being struck by missiles. Unfortunately, more civilians have been killed. There is a slimmer of hope at the moment as peace talks began yesterday. There are obvious concerns that both parties are way off agreeing with each other. I think Russia want Ukraine to essentially surrender and be demilitarized, whereas Ukraine obviously want Russia to cease fire immediately. So what's the latest with the Russian currency, the ruble? Well, the ruble was actually worth less than 1 US cent after falling as much as 30% this week already. It's been fluctuating quite a bit, so that might change by the time we go on the chart, but it has been worth less than 1 US cent this week. In Russia, there were real concerns actually of an economic meltdown after the long list of sanctions, mainly financial I should say, placed on them by the West. Now the sanctions range from blocking Russian banks from settling payments in various different currencies, and they also freezing the assets of the wealthiest Russian individuals as well. This has of course caused a spiral effect down to customers who are seen rushing to withdraw their deposits from banks, and this could get worse as we go on. What's been the response from Russia? Well, in order to avoid this financial meltdown, Russian President Vladimir Putin was forced into crisis talks with his economic advisors. The solution to the meeting was that Russian central bank more than doubled their interest rates from 9% to 20%. The Moscow Stock Exchange remains shut until further notice. It's been shut since Monday. And although the initial interest rate hike halted the rapid meltdown of the ruble, is unlikely to be enough as Russia's economy remains under a really serious threat and attack. This has only caused a pause really in the fall so far. And to conclude, of course, this has really rattled the markets, as you will see on the chart soon. Russia doubling their interest rate to 20% has caused a pullback on the USD ruble chart. However, Russia, for me, is likely to remain uninvestable. So their currency as a whole is likely to remain weak. And who knows how far this could go. It's only really when you actually go onto the chart that you can actually see the scale of this move to the upside in USD ruble. So i.e. USD strength in comparison to ruble, or more likely severe ruble weakness. So this is the price action all the way through September, and I've had to zoom out because you actually can't see on the screen just how big this move to the upside was, literally at the back end of last week and spilling into this week as well. So yeah, I mean, as it stands at the moment, USD ruble trading at 105 above, which essentially means that the ruble is worth less than 1 US cent, which is quite astonishing. Now, what I find quite significant is we have this movement from the Russian central bank to double their interest rates up towards that 20%. And really, this has been the price action that we've seen. This is a 4-hour chart. This is the price action that we've seen as a result of what they've done. So we're still actually fairly close to these highs that we have up at 112. So is this move? I think the question of the video is this move enough? I don't think it is, and I think that, as I said, the Russia are going to remain uninvestable throughout all of this, and probably after this as well, due to the reputation that they will have, although it's not the fault of the Russian people, of course. When we actually look at what's happening on the RSI indicator, we actually have this quite significant divergence as well. So you can see that the market's actually moved here, but you actually see the RSI really actually potentially falling, which is a really weak sign. It's going to be hard to do too much analysis on this. If we can get any sort of buying opportunity to around the 89 level, I think this will be a significant support level for USD ruble. Other than that, I see this market being extremely volatile. You can see that the volume in the candles is a lot higher than it has been for ages. Like, I'm scrolling all the way back, and you can just see that the huge move that we've had. So potential buying zone around the 90 level. Other than that, I see this continuing to be bad for the ruble, of course, and I see a move up towards the 120 or potentially even the 130 level eventually, depending, of course, on how on what happens in the invasion of Ukraine, which of course is really distressing, and it's quite hard to actually do these sorts of videos when we know something so bad is happening in another country. So of course, it goes without saying that